Hello, welcome to another in our series of VinciWorks compliance discussions. I'm Gary Yantin, Director of Best Practice at VinciWorks, and today I'm joined by Ruth Cohen, Legal and Research Executive here at VinciWorks.
Hi Gary.
Hi Ruth. On the 25th of May 2018, the Economic and Financial Affairs Council of the European Union, also known as ECOFIN, adopted the 6th Directive on Administrative Cooperation, requiring tax intermediaries to report certain cross-border arrangements that contain at least one of the categories known as hallmarks, which are defined in the directive. This has become commonly known as DAC6 or DAC6. DAC6 aims to clamp down on aggressive tax planning and is set to impose a huge compliance burden on taxpayers and their advisors, potentially even in circumstances where there is no tax benefit at all. Now clearly this is a very important topic. VinciWorks have recently held a roundtable event with over 20 law and accounting firms present, and Ruth and I have spoken to lots of firms about DAC6 and how it will affect them. The purpose of this discussion today is to give you an overview of DAC6, analyse how it might affect you. If you've got any further questions about DAC6, you can email us at training@vinciworks.com and we will respond to you as soon as possible. Very excitingly, our audio content, including this conversation, is now available as podcasts. You can search for VinciWorks in your favourite podcast player, so whether that's Spotify, iTunes, Stitcher or something else, and you'll be able to find us and listen to this and lots of other of our previous webinars and conversations. So Ruth, maybe you can begin by giving us a short overview of what DAC6 is.
Sure, Gary. As you mentioned, DAC6 is an EU Council directive that applies to cross-border arrangements involving at least one EU member state. It aims to strengthen tax transparency and fight against aggressive tax planning by highlighting a number of tax events, known as hallmarks, that could render a cross-border arrangement reportable to the local tax authorities.
Okay, so who would be affected by DAC6?
So the directive discusses that a set of transaction facilitators, known as intermediaries, will have reporting obligations.
And what is an intermediary?
An intermediary is described by the directive as anyone who designs, organises, implements, or makes available a transaction. So this could be a law firm creating a corporate structure for a transaction, or an accounting firm providing tax advice to its clients. An entity will still be considered an intermediary if they have reasonably been expected to know they were carrying out one of these activities. So what does this mean in reality? It means that intermediaries would likely be banks, law firms, trust companies, insurance companies, private equity companies, holding companies, accountants, consultants, financial advisors, to name but a few.
Okay, so that's a very wide range of businesses that might be affected. So it's a good point just to mention here that this is not an exhaustive list, and there might be other professionals involved in transactions who might be intermediaries, and also the tax-paying client might also be required to report the transaction. So Ruth, tell us a bit more about the hallmarks that you mentioned and the categories that you were referring to. Do these highlight the transactions which might be considered reportable?
Yes, Gary. The hallmarks are in essence characteristics which, if present in a cross-border transaction, will require reporting to the local tax authorities. The hallmarks, as you will see, tend to hint towards there being a form of tax advantage involved in a specific transaction. The hallmarks are divided into specific hallmarks and generic hallmarks, and in addition, some, but not all, must meet the main benefit test.
The main benefit test. Okay, let's have a quick reminder of what the main benefit test is, Ruth.
So again, the main benefit test is defined within the directive, and it is met when a tax advantage is found to be the main benefit or one of the main benefits of a particular transaction.
We're going to discuss shortly where the main benefit test applies in more detail.